Weaker than expected retail sales data raises fears that the Fed is pushing the U.S. economy into a recession. Wall Street sees its worst day in 3 months as the Dow Jones plunges over 750 points and Nasdaq sheds over 3%. Asian markets, they trade lower, and the SGX Nifty too indicates a weak start for the Indian market. The Bank of England raises rates by 50 basis points. The European Central Bank too hikes the Eurozone interest rate by 0.5%. European markets extend losses as ECB President Lagarde strikes a hawkish tone, says significant rate hikes at a steady pace are yet to come. The threat of further rate hikes by global central banks and weaker outlook on fuel demand sees Brent slip over 2% to about $81 a barrel. India's trade deficit rises to nearly $24 billion from a little over $21 billion last November. Exports are largely flat even as imports rise by $2 billion. Windfall gains tax on domestic crude is slashed by 3,200 rupees a ton to 1,700 rupees a ton, and the duty is reduced on diesel to 3.5 rupees per litre from 5 rupees per litre. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines and big ones at that. But before we get into greater detail in all of them, first up, let's take a look at what the Asian markets are doing. Taking cue from the global markets, that is the US markets, they are largely lower. The Hang Seng sitting with cuts of 0.6%. We have Taiwanese index, which is seeing a sharper cut, down around 1.6%. Across the board, their selling is what we are seeing. Shanghai is down 0.2%. Kospi is down 0.4%. And this is after the retail sales for the month came in lower in the US. And that raised fears that, yes, there are fears of recession. And that's the reason across the globe, markets are under a lot of pressure. And SGX Nifty, as a result of which, is indicating that the start for our own markets, well, that could be deep in the red. A 64-point downtick after yesterday's fall is what SGX Nifty is indicating. And broad-based sell-off on Wall Street as recession fears intensify, with the Dow Jones sliding over 700 points, notching its worst day since September. The S&P 500 down over 2.5%, and the Nasdaq Composite closing with a nearly 3.5% cut. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
It's the biggest drop for stocks in more than a month, as a bigger than expected drop in retail sales in November added to fears that the U.S. is headed for a serious recession, even as the Federal Reserve is keeping the pedal to the metal, saying more interest rates are coming, those interest rate hikes, because inflation isn't under control yet. The Dow closing down 764 points. That's a 2.25% drop. The S&P 500 ended down 2.5%, while the Nasdaq saw the biggest downfall, down more than 3.25%. Meantime, a big test coming up for Walt Disney. Its new Avatar sequel opening today here in the U.S. James Cameron's The Way of the Water is expected to generate North American box office sales of between $150 and $175 million, which would be the third biggest opening weekend this year. But that may only be part of the story. The original Avatar started slowly back in 2009, and it made a lot of its money from fans who saw it more than once in the theaters, keeping it in the theaters for 8 months. With streaming these days, that doesn't happen. That's the action from here in the U.S. market. Now back to you in Mumbai.
Okay, all right. Now, moving on to the next one. The Monetary Policy Committee of the Bank of England voted 6-3 in favor of a 50 basis points rate hike, taking the bank rate to 3.5% as expected. The rise marks a slowdown from the BOE's 75 basis point increase in November. The Bank of England's MPC in a statement said, and I quote, "The labour market remains tight and there has been evidence of inflationary pressures in domestic prices and wages that could indicate greater persistence and thus justifies a further forceful monetary policy response." End of quote. The MPC noted the considerable uncertainties around the outlook, but said it will respond forcefully if inflationary pressures begin to look more persistent. The Swiss National Bank also raised its benchmark interest rates by 50 basis points on Thursday. The central bank said it was looking to counter increased inflationary pressure and a further spread of inflation with this move. Remember, inflation in Switzerland is presently at 3%, well above the S&P's target of 0 to 2%. Reacting to the rate decision by major central banks, European markets also ended Thursday's trading session sharply lower, with the French CAC sliding 3%, the German DAX down over 3%, 0.5%, and the British FTSE close to 1% lower. Following hawkish commentary from the ECB, the euro hit its highest level in 6 months, but slipped later in choppy trade. All right, that's all the updates from the global markets for now. We'll slip into a break. Up next, we'll tell you how these global cues will impact our own markets. Stay tuned. Welcome back. You're still watching Power Breakfast on CNBC-TV18. We spoke about the global market action, a lot of rate hikes, a lot of central bank action, and the result has been weak global markets. But how will these overnight cues impact our own markets? We have our research team joining in with just that, the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Reema, it's a Friday, first of all, so happy Friday to all of you. But tell us about the market cues today.
Well, I know you're the most excited person on a Friday, so it's great that, when you welcome us all saying happy Friday. But just on that point about central bank action, this week we've seen rate hikes worth amounting to 587.5 bips. That's massive, right? We've been only talking about the big ones like Fed, ECB, Bank of England, but there were so many others like Swiss National Bank, the Taiwanese, the Philippines, Denmark, Norway. All of them had their final policy rate hike, and all of them have gone ahead and raised interest rates. But anyway, talking about the setup right now, expect the markets to trade weak given the global sentiment and the upcoming holiday season. Asian markets, as you've been pointing out, are currently under pressure, and the SGX Nifty is also lower by 70 basis points. We've seen a very sharp sell-off on Wall Street. The Dow was down more than 700 points, its worst one-day performance in September. The S&P 500 lower by 2.5%, and the Nasdaq slipping 3.2%. European indices too down 3 to 3.5%. On expected lines, the ECB, Bank of England, and the Swiss National Bank have gone ahead and raised rates by 50 basis points. While this was on expected lines, the rest of it was actually far more hawkish. Look at the statements that we've got from the ECB President, Christine Lagarde. She stressed that if you compare with the Fed, we have more ground to cover, we have longer to go, we're not slowing down, we're in for the long game. She stressed that significant future rate rises at a steady pace were still to come. And plus, there is that quantitative tightening which is going to come in March. So while the rate hikes were on expected lines, the rest of the commentary seemed to suggest that there is no pivot in sight, and central banks continue to stick to being hawkish as their script. Talking about the flows, the DIs bought 261 crore in the cash market. The FIs sold 711 crore in the cash market. The FIs were net sellers after 2 days of buying, while for the DIIs, it was the 7th consecutive day of buy figure. Not large in terms of overall quantum, but considering that the DII sold in the month of November, the fact that they're buying in December is a good news, and that's offsetting the selling that we're seeing from the FIs. Back to you.
All right, okay, so that is the market setup. Reema, thank you for that. And over to Vahishta now, who will list out all the stocks in focus today. Vahishta.
Hi, good morning. Let me start with Wipro, wherein Mazda Europe selects Wipro for application transformation in a 5-year multi-million-dollar deal. Moving on to Deepak Fertilizers, which announces a demerger of its mining chemicals and fertilizer business. Kajaria, a joint venture agreement is executed on the 15th of December between Kajaria International DMCC, which is in UAE, a wholly owned subsidiary of the company, and Al Ratat Marble Factory, which is also in UAE, and the purpose of this agreement is to run the business of glazed vitrified tiles, sanitary ware, marbles, etc. in UAE through a company which is called as Kajaria RMF Trading, by way of acquiring its shares in an equal ratio, which is in 50-50% on a joint venture basis. Moving on to Hindustan Foods, the company is going to acquire Reckitt Benckiser's Healthcare India Khasra manufacturing facility for approximately 150 crores, and this facility is engaged in the manufacturing of pharmaceutical as well as non-pharmaceutical products. Shriram Pistons and Rings to acquire 51% stake in EMF Innovations for about 80 crores. KPI Green signs a long-term power purchase agreement for the sale of 7.5 megawatt solar power with Tata Motors. And the last is GMM Pfaudler, which is a source-based information. The promoter is likely to have sold 1.34 crore shares, which is equivalent to 29.88% via a block deal, and the floor price for the block deal is fixed at 1700 rupees per share. That is equivalent to 12% discount to its current market price. Back to you.
Okay, so the expectation is that this could be the block deal. It has not been sold yet. Vaishta, thank you so much for joining us with all those details. Let me go across to Manglam now, who's joining in with all the cues from the FNO space this morning. Hey, Manglam.
Good morning. So this is a Friday, but one has to brace oneself for, Freaky Friday, so to say. The reason why I say that was because yesterday wasn't a good day of trade. We opened lower and then we kept trudging lower until the last hour of trade where the decline was much faster. And that was followed by weakness in the US markets. And now the SGX Nifty is indicating that the cut could be even lower. While the Nifty closed above the 18,400 mark, that was purely a function of the last hour averaging. In fact, last tick was way below that 18,400 mark itself. The FIs, they sold in the cash market, 711 odd crores. The DIs bought, but there was a net outflow of almost 450 odd crores. The December futures premium, we've been talking about that over the last few days. It was at one point above that 100 mark and now has, nudged lower and now is at around 52 odd points itself. So that's telling you there was further selling by FIs, not only in cash, but in index futures as well, almost 2,000 crores. What did they do? They unbound nearly 10,000 longs, added about 10,000 shorts. And this is something that they've been doing over the last few days. So as a result of which the FI longs, which just a couple of days ago were at 61%, have now gone to around 54%, which is the lowest that we've seen in this series so far. The Nifty is now below important levels, 20-day moving average and the 20-day exponential moving average as well. So those marks will be resistances on the way up. The Nifty 50-day exponential moving average is at 18,170. So that is something we'll be watching out for. Yesterday, the put writers were pretty active for the next week. But if I'm looking at the Nifty Bank has support around 300 points lower, which is 43,185 and 43,142, both the 20-day moving average and the exponential moving average. So those are marks that we'll be watching out for on that particular index as well. I was talking about options, 18,400 put, adding around 15 lakh shares for a premium of 100 rupees, telling you that maybe 18,250 to 300 would be the first mark that the bulls would look to defend. If not, then we'll have to go back to the 18,150 mark, which is the 50-day exponential moving average. Just keep an eye out on the put-call ratio, which is below 0.9. It's at 0.88. But remember, for it to actually become oversold, it would have to go towards 0.7 to 0.75. So all things set for a slightly freaky Friday.
Freaky Friday, but it's Friday nevertheless, right, guys? Thank you so much for joining us and taking us through what to expect from market moves today as well. With that, let's move on and talk about commodities now. A lot of action in that market as well. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning.
Morning, and thank you for that, Sonal. Well, yes, volatility just about continues. After 3 days of gains in crude oil prices, where the prices surged by 8%, last night was 2% of a profit taking. The strength in US dollar, further rate hikes by central banks as a statement coming in is weighing onto the markets here. And then the Chinese November factory output, retail sales, all of that data was on the weaker side. And then Keystone Pipeline also says that they are resuming partial operations. So some of that premium seems to be coming off the prices. Interestingly, it's the Goldman Sachs report that also came in overnight, which says that they are bullish on commodities, that they expect the crude oil, copper, all of these industrial commodities to continue to surge into the market. The best of gains overnight clearly came in from the natural gas prices, 9% of a jump up and $7.2 per MMBTU is what we saw. As of now, it's fallen back below $7, but the inventory decline, as reported by EIA, higher exports from US, winter demand, all of that is expected to keep support in case of natural gas prices going forward.
Okay. All right, Manisha, thank you so much for joining us. A lot of action in the commodity markets as well. With that, we'll slip into a short break and more news and updates will follow after this very short break. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. To the big news that we got just a while back, the government has cut windfall gains tax and duty ahead of the scheduled fortnightly review. Tax on crude petroleum will reduce to 1,700 rupees a ton from 4,900 rupees per ton earlier. The levy on petrol will continue to be nil, while duty on aviation and turbine fuel has been cut to 1.5 rupees a litre from 5 rupees a litre. Remember, when the windfall tax was levied for the first time, the crude taxes were 23,250 rupees per ton and the other export duties were higher as well. So massive fall is what we've seen on the back of massive cut in crude prices as well. With that, we'll get you some macro updates now. India's trade deficit has risen to nearly $24 billion from a little over $21 billion last November. Exports were largely flat around the $32 billion mark, while imports rose by over $2 billion in November. And with that, we move on. As a part of our Outlook 2023 series, my colleague Prashant caught up with S. Narain, who's the Chief Investment Officer at ICICI Pru MF, to understand how he expects the market to behave in next year and why he believes asset allocation is the best way to go. Let's listen in.
If you look at the last month, what we saw was that debt index fund have received huge inflows, and that's something which possibly as a product didn't exist 2 years back. So I think clearly we are seeing a situation where people will consider debt and SIP both, and that will be the change which we will see in 2023. I think the big call will be that inflation will become much smaller as an issue in 2023. And therefore, we are in a situation where multi-assets become very interesting, that you consider all the asset classes. You consider a product like multi-asset, which can invest in debt, equity, gold, silver, REIT, InvIT. You can do everything. Because I think that kind of an asset will become much, much more interesting because you're still going to have a volatile year ahead. So large caps became the area where bulk of the selling has happened this year. So large caps became the area where valuation comfort is there to a higher extent. Mid cap and small cap, the mutual fund industry ensured that there was continuous SIPs. So that area has seen virtually no selling. So those areas, the valuations are not cheap. See, you need some wave of selling for the valuations to correct. And there has been no wave of selling for years now. So, and retail was also positive. So that's not an area where we have seen any selling. Once you see selling, the sector's valuations correct. So that's why we prefer large caps over mid caps and small caps. No, I actually told them you have to take tactically smaller positions, and it helped us a lot. If you look at it in the last 1 year, the fact that, people, the old fogies like me ensured that we took smaller positions helped us a lot because many of them corrected 50, 60%. And now we told them, look at everything with an open mind. And if you look at it, some of those new age companies, we would have our highest ever position today after a 50% fall, not 1 year back.
All right, that is our Outlook 2023 series. Of course, you will continue to get excerpts of this conversation through the day only on CNBC TV 18. And with that, it's a wrap on this edition of Power Breakfast. Do stay tuned. Bazaar Morning Call comes up next.